Hello everyone, good morning, good afternoon, good evening, depending upon when you are watching this video lecture. Today let us discuss about accounting standard 24 that is related to discontinuing operations. It is mostly a theoretical standard which focuses on the presentation and disclosure aspects rather than recognition or measurement aspects. So definitely the questions, if at all, that we expect from this standard, they will be of theoretical or case based in nature. So let us understand what are the requirements of the organizations if they have any discontinuing operations, how to present them or disclose that fact in the financial statements of the organization according to AS24. So this standard AS24 tries to establish the principles for reporting. Once again, it is not related to recording or measurement, it is related to reporting the information about, naturally, as the name indicates, discontinuing operations. So what happens because of this reporting? That will enhance the ability of the users of the financial statements so that they can make projections of an enterprise's cash flows and earnings generating capacity, and most importantly the financial position, by segregating the information about discontinuing operations from the information about continuing operations, so that the organization's real state of affairs can be understood, appreciated and analyzed well by the users of the financial statements. That is the objective of AS24, which ultimately focuses on the reporting aspects of discontinuing operations related to an organization, thereby enhancing the ability of the users to understand the financial position of the organization in a better manner. And how does it achieve it? By segregating the information about continuing operations from the information about discontinuing operations. That is the objective of accounting standard 24. So naturally the crux of this standard will be about identifying what is a discontinuing operation. A discontinuing operation is a component of an enterprise, first of all, that the enterprise, pursuant to a single plan, according to the single one plan of an enterprise, a particular component of an enterprise is going to be disposed of substantially in its entirety, such as by selling the component in a single transaction. There is an example. Or by way of demerger, or by way of spin-off of the ownership of the component to the enterprise's shareholders. But whatever this case may be, whether it is selling to outsiders or by segregating one portion of an entity into a separate new legal entity in the form of demerger or spin-off, whereby the ownership of that component of the business has been passed on to the shareholders. Even then, we can call it as that portion of discontinuing operation related to this particular enterprise. So it is that component of the enterprise which has a single plan of getting disposed of substantially in its entirety, completely in its entirety. It is probably going to be disposed of, or hived off, or sold off, or spun off, whatever the case may be. All of them are called as, are defined as discontinuing operations. And not necessarily that they have to be sold off in entirety, not necessarily. That is only one aspect. The second aspect is the disposing of can happen in piecemeal also. Means what? One by one, selling of the components, assets and settling the liabilities individually. Even then, we can call it as a discontinuing operation. So whether the disposing of happens in a single plan in its entirety and substantially all of the assets and liabilities of a particular component of an organization have been disposed of or spun off, that is also a discontinuing operation. Even if the disposing of happens piecemeal also, by selling of the components, assets and liabilities individually also, that can be called as a discontinuing operation, it is a component of an enterprise. So component means don't think like a machine component and all. If there is an organization, usually there will be so many types of business lines that an organization might have. Different types of businesses. Just for example, for understanding, Reliance has petrochemical business, refinery business, and digital business and retail business. So many businesses are there. Let us say Reliance wanted to spun off or create a new company related to the digital aspects of it into a separate company, which already has done, called as Geo Platforms Limited, for example. Then that is a discontinuing operation as far as Reliance Industries Limited is concerned. But of course, that will form a new company altogether, which will be a subsidiary of Reliance Industries only. The financials of that subsidiary also will be consolidated. But while presenting the standalone financial statements of Reliance Industries, specifically the data and information related to the discontinuing operation in this example, which is the digital services or business line of Reliance, that is the component of an enterprise which might be disposed of. That fact has to be shown, disclosed in the standalone financial statements of Reliance Industries Limited. Once again, as an example we are talking. Don't try to search for this in the Reliance Industries annual report, which I did, but unfortunately at that point of time there was no such disclosure. Maybe the plans happened later, or maybe even the application of this particular accounting standard might not have been required by them, because already it is a company which is already following Ind AS. So the disclosure in that particular sense, in the same way as AS 24, may not be required. So the point of actually looking at it in the financial statements is not required for us. As I told already, this standard is more of a theoretical standard. Majority of the organizations normally will not have any such situation where they have to do something according to AS 24 also. Every organization will have some discontinuing operation, or what? How will it have? Sometimes it may have. If it has, then what is a discontinuing operation? They should know. That is why the definition of discontinuing operation has been given like this. It is a component of an enterprise where that enterprise pursuant to a single plan is disposing of substantially in its entirety, or disposing of piecemeal. Either way it is okay. And not only that, even if it is terminating a particular component through abandonment, that means a particular line of business itself is abandoned, let us say, that can be called as a discontinuing operation. So that is the basic conditions to call a particular component of an enterprise as a discontinuing operation. And not only that, this particular component of an enterprise should represent a separate major line of business or geographical area of operations. Now you have to remember AS 17 segment reporting, wherein business segments and geographical segments have been defined. For example, in your example, Geo will be a business segment. If, for example, that particular business line of that organization is going to be disposed of to a new entity, that becomes a discontinuing operation, because it is a major line of business. It is a business segment. If not even a major line of business, even if it is a major geographical segment also, still that can be called as a particular component of an enterprise which is a discontinuing operation. And not only that, that particular component should be capable of being distinguished operationally also and for financial reporting purposes also. So that should have capability of being operationally and financial reporting wise also special characteristics. It should be distinguishable. These are the three conditions when we can call a particular component of an enterprise as a discontinuing operation. First thing first, there should be a single plan to dispose of, either substantially or piecemeal or by terminating through abandonment. That should be a single plan. And this particular component which is now being called as discontinuing operation should represent a major line of business or geographical area. And this particular component should be capable of being distinguished operationally also and for financial reporting purposes also, then we call that component of an enterprise as a discontinuing operation. If any of these things are happening, either disposing of substantially or disposing of in piecemeal or terminating it through abandonment. That is the core of this standard, we can say, because as the name indicates, ultimately discontinuing operation means what matters most. Of course, once we know what is a discontinuing operation, then definitely we can understand what should be the presentation and disclosure letter. But before that, cases can be given also like this. So we need to look at some of the examples of the activities that do not necessarily satisfy the criteria A of the definition, but might do so in combination with other circumstances. So the point is, do we have a list of things that can tell that these are all discontinuing operations, these are all not discontinuing operations? Is there something like that? Not possible. Nothing like that. It will be depending upon case to case. So we cannot judge why Reliance has not identified Jio as a discontinuing operation. Maybe there are some other facts, realities which we don't know. But definitely, AS24, according to the theory, says that if there is a possibility of disposal substantially or piecemeal or terminating of an enterprise or a component of an enterprise that has a separate line of business or geographical area and that can be distinguished operationally and for financial reporting purposes, then that operation is called as discontinuing operations. So these conditions, all the three conditions have to be met in order to call something as a discontinuing operation. But practically, all three may not be met. Even though, let us say, we say that A point is met. Sometimes it may not be possible to distinguish it operationally. Then that will not be fulfilling the criteria to be called as discontinuing operation. So that is why we have to just focus ourselves only towards the theoretical aspects of this standard than trying to apply it in all the cases. But in the examination, if the case-based questions are given, of course, we have to use the standard text as AS24 says, and also the logic to be applied to determine whether a particular thing is a discontinuing operation or not. But just by looking at something, we cannot say it is a discontinuing operation. See, normally, just these points, if they are happening, they do not necessarily mean that they are discontinuing operations. That is the point. So the examples we are looking at now are those which do not satisfy necessarily the criteria A of the definition, but still, in spite of that, they can be called as discontinuing operations also. So are we saying yes or no? Mostly we are saying no, but at the same time we are also saying there is a possibility to be called as yes also. So let us forget about yes. If that yes happens, that will happen only on the basis of some circumstantial things which might call or which might make those things as discontinuing operations, but normally without that exception, we cannot call just because the following things happened, they are discontinuing operations. That is the essence of these examples, and this can be asked as a theoretical question by itself. What are the examples of activities which may not be called as discontinuing operations by satisfying the definition mentioned in AS24, but still they may be called when the other circumstances support it. These examples you can write. Let us say gradual or evolutionary phasing out of a product line or a class of service. That need not necessarily be a discontinuing operation. Particular product line or a class of service, if it is discontinued, that not necessarily means a discontinuing operation. For example, Flipkart has discontinued its web-based website, which earlier used to take orders from the laptops and computers also. Now they have discontinued that. Only anybody wants to order something on Flipkart, they have to order it. So only from mobile phones and only mobile app is active. Website of Flipkart is not active from long time, as an example. So that means they have phased out one line of service or one class of service. Should we call it discontinuing operations because of that? Answer is no. No, we should not. Just because of that, we cannot. Can it be called discontinuing operations because of other circumstances? Different, yes. What are the circumstances? That we don't know. That will have to come to us to decide whether it is a discontinuing operation or not. But Just phasing out of a product line or class of service cannot be called as discontinuing operations. Same way, Maruti Suzuki, for example, has discontinued certain models. Certain types of models are discontinued by Maruti Suzuki, say Ritz and all that. Some types of cars are not being made anymore by Maruti Suzuki. Does it mean it is a discontinuing operation? No, not necessarily. Just one product line is stopped or phased out. That does not make necessarily it a discontinuing operation. One example of that is that phasing out is not necessarily a discontinuing operation. Nobody is saying that conclusively it is not a discontinuing operation. Nobody can tell that. We are only telling it not necessarily means it is a discontinuing operation. Then, second point. So the first point is phasing out. Second point, discontinuing even if relatively abruptly several products within an ongoing line of business. Not one product, sir. Many products disrupted, many products discontinued abruptly, even though suddenly 3-4 different types of products are suddenly stopped. But business is going on. So just because of that, can we call it discontinuing operations? Once again, no. Even if the company stops one product line or class of service, even if it stops several products also within an ongoing line of business, still it cannot be called as discontinuing operations. Same way, shifting of some production or marketing activities for a particular line of business from one location to another, how can it be discontinuing? Let us say somebody shifts their production facility from China to India. So does it mean discontinuing operations? No, it is only shifting. One particular line of production or marketing activities are shifted from one location to another. They cannot be called as discontinuing operations normally. So they do not fall under the basic purview of the word discontinuing operations. Then even, fourth point, closing of a facility also to achieve productivity improvements or other cost savings. Sometimes it so happens for cost savings, certain entities will be closed, certain facilities will be closed. Just for once again example, say Maruti Suzuki has 2 plants, 3 plants across India for manufacturing of its cars. And if at all, because of the lack of demand or whatever, if it closes down temporarily, generally, or even for some unknown period of time, if it closes down a facility to achieve cost cutting or cost saving for improving the productivity, that does not necessarily mean that it is a discontinuing operation. So in general, discontinuing operation has to be something which should eventually result in disposing of substantially or in piecemeal more or less all the assets and liabilities of that component of the enterprise. Then only it will be discontinuing operation. Just because phasing out of one product line or stopping abruptly also even several products within a ongoing line of business, or shifting of the production or marketing facilities from one location to another location, or even closing down a facility for the purpose of achieving better productivity or cost cutting, does not make them as discontinuing operations. These are the examples we should be remembering, and similar points can be asked as cases also. Then you can refer to AS24 and say that these are not discontinuing operations per se. But yes, if other circumstances suggest that they are discontinuing operations, if they are meeting the other criteria, then yes, then probably they can be called as discontinuing operations also, depending upon those facts. But prima facie, we cannot call these 4 things as discontinuing operations. And these 2 things are the core things. One way we can say, if at all an examination question can be expected from this standard, you have to remember these words. What is discontinuing operation? You should remember that and should be able to reproduce. And this one, there is nothing to remember, but understand that just by phasing out or even discontinuing some of the products or shifting the facilities from one location to another location or closing of a facility for achieving productivity or cost savings purposes cannot be prima facie called as discontinuing operations. So very core things as far as this standard is concerned are these 2. So that is AS24 crux, we can say. Okay, fine. This is discontinuing operations. Okay. But in this, when can we say that an organization or a component of an enterprise can be distinguished operationally and for financial reporting purposes? That can be a separate definition which was given in AS24. When can we say that a particular component of an organization can be distinguished operationally and also for financial reporting purposes, which was nothing but criteria C in the definition of discontinuing operations. When is that? Main. When all, not one or two, all the following conditions are met. First condition is the operating assets and liabilities of the component can be directly attributed to it. We can identify the assets and liabilities of that component of the enterprise. Practically difficult. Second, revenue can be directly attributed to it. In general, it's okay, reasonably not a problem. At least a majority of its operating expenses can be directly attributed to it. So assets, liabilities, revenue, expenses. What else will be there? All of them. If we can attribute directly to a particular component of an enterprise, that component of an enterprise, component is nothing but a part of the enterprise, segment of the enterprise, you can understand. So that component of the enterprise, which is now being called as a discontinuing operations, that component can be called, it is possible to be distinguished operationally and for financial reporting purposes. When all the conditions are met, not one or two. So assets and liabilities should be directly attributed to it. Revenue can be directly attributed to it, and even at least majority of the operating expenses can be directly attributed to it. Then only a component can be called as it is possible to get distinguished operationally and for financial reporting purposes. So this is an extension of the definition only. So this is discontinuing operations. Core aspects in a nutshell. Definition, examples of what are not discontinuing operations per se, and what is the definition or situation when a component can be called as it being capable of being distinguished operationally and for financial reporting purposes. Okay, fine. Discontinuing operations are there. We identified them. Yes, they are there. So what? So what does AS24 say? Naturally, what it will tell? It will tell to disclose. What else it will tell? Nothing else is there. So this standard is not about recognition. This standard is not about measurement. There is nothing to calculate for us. Only point is, in reality, for the big corporations, if at all they identify any discontinuing operations according to AS24, which meet all the criteria which are mentioned in the definition, then they have to disclose. That's all. When they have to disclose, what is that initial disclosure event? What is the event? When they have to disclose. Should they disclose the moment where they have a thought in their mind? Suddenly the CEO or chairman of the company got a thought, okay boss, I will demerge this company separately, or I will hive off this company or spin off this company. Is that a disclosure event? No. Just Mukesh Ambani thinks that, oh, Jio has to be made a separate company from Reliance Industries Limited. That thought is not a disclosure event. No, it is not. So that is why we have to identify initial disclosure event. What is the initial disclosure event? Is occurrence of one of the following, whichever is earlier. Not all of them. At least one of the following, if it happens, whichever occurs earlier becomes the disclosure event. So, first of all, there should be a component of an enterprise which should be called as a discontinuing operation according to this definition, and that component of the enterprise which is called as a discontinuing operations has to be disclosed separately only when the initial disclosure event occurs. Otherwise, there is no need to disclose. So what is this initial disclosure event? If any one of these two things happens, any one of them, whichever occurs earlier, that becomes a disclosure event. What is that event? First condition is when the enterprise has entered into a binding sale agreement. So that means really agreements are signed. A binding sale agreement, not when negotiations are going on, talks are going on, people are meeting, talking. No, not then. When the organization, the enterprise, has entered into a binding sale agreement for substantially all of the assets attributable to the discontinuing operation, then that becomes an initial disclosure event. Or not only that, or even when the enterprise's board of directors or the similar governing body has both, once again, approved a detailed formal plan for the discontinuance. So once again, board of directors are discussing it. They had a board meeting in which they thought about discontinuing some operations. No, that is not an event. They have not just discussed. What they have done? They have approved a detailed formal plan for the discontinuance, and not only that, Here the word is and they have made an announcement of the plan also. If they have even approved within the closed doors without any announcement of the plan, still it is not a disclosure event. So both of them should happen in point B. First point, the board of directors should have approved detailed formal plan for the discontinuance and they should have announced that plan also. If that happened, that is initial disclosure event, if that happened first. Or the second thing, if at all, there was a binding agreement which was entered into for selling or substantially selling all of the assets of the discontinuing enterprise or the component which is now called as discontinuing operation. So if any of these two is happening, whichever occurs earlier, that is called as initial disclosure event. That's all. Then another theory question can be asked. So now we talked about a detailed formal plan. How the detailed formal plan could be. What will it generally include or consist of? See, this is not actually related to accounting. Mostly it is management related subject. But still, as part of the standard it is there. So we have to go through that. And most importantly, the possibility of theory question is there. This standard itself is theory question. Questions can be, what is a discontinuing operation according to S24? Direct question. Examples which are not discontinuing operations. Direct question or case-based questions also can be asked on this. When can a particular component be distinguished operationally and for financial reporting purposes? When can we call it like that? Direct question. What is the initial disclosure event? Direct question. Or a combination of them can be asked. So for 5 marks, only this will not be there. So according to S24, define the following. 3 things he will give. Discontinuing operation, first question, initial disclosure event, second question. Enough. That is a 5 marks question. Like that. So any combination of these questions can be theoretically asked under S24. That is why you have to remember these things. So initial disclosure event is the occurrence of any one of these things where the enterprise has entered into a binding sale agreement, or if the board of directors have approved a formal plan and announced it also. If any one of these things happens, whichever happens earlier, that becomes initial disclosure event. And when can we say that the detailed formal plan is there? What kind of details it will consist of? That can be a theory question by itself. Of course, the major assets have to be identified which are supposed to be disposed of. What is the expected method of disposal? Is it sale or is it demerger, or what kind of disposal is going to happen? The period expected to be required for completion of the disposal, how much time it will take. So what is the method? What are the major assets to be disposed of? What is the period expected for completion of this entire process? And this is not something like we can put in OLX and sell it immediately. Not like that. We were talking about a major component of an enterprise. It takes time. How much time it takes? That has to be mentioned in the plan. And what are the locations, principal locations which are all affected? That will be mentioned in the plan. And not only that, employees related data, the location, function and number of employees who will be compensated for terminating their services. Naturally, when certain portion of the organization is being discontinued, some employees might be terminated, and how many of them will be terminated, or at each location how many number of people, or what kind of people, what function people are going to be terminated. That has to be mentioned in this plan. So the plan should consist of all these things. What are the major assets to be disposed of? What should be the method of disposal? How much time it takes to complete this disposal process? What are the locations affected, and how many number of employees and what kind of employees are affected by this disposal, because they will get terminated because of this disposal. And not only that, most importantly, the estimated proceeds, means money, which will be realized by disposal. So okay, we are selling it, we are discontinuing it, whatever we are doing, ultimately how much money we can get from that disposal, that should be laid out in the detailed formal plan, which should be naturally approved by the board of directors and announced by the board of directors also, in order to constitute a disclosure event. We can call that as initial disclosure event. Naturally, this happens first. Binding sale agreement is a general formality, naturally with the other party, whoever is the purchaser, with whom the organization enters into a binding sale agreement. Then also that becomes an initial disclosure event. Whichever of these things happens first, that becomes initial disclosure event. And this can be a theory question also. what should be the components of, what could be normally, what are generally the components of a detailed formal plan for the discontinuance, what things they will include in general such a kind of plan. General things only, but you should remember and write them. Just gup and gas, if you write stories, if you write, you don't get marks. You have to clearly write the major points. What are the assets, identifying them, method of disposal, time period, locations, employees, proceeds. That's it. Those are the things which generally will be consisted in the formal plan we are talking about. Okay, initial disclosure event happened. Event happened, then what disclosure has to be made? So many disclosures has to be made. And since this entire 24 is a disclosure standard, this could be also one of the most important questions possible. Any of these things can be asked as theory questions. What are the disclosure requirements of AS 24? You don't have to write all of them. At least 4 or 5 of them, depending upon the number of marks, you should be able to write. What should be the disclosures? What should be the initial disclosures that should happen? The moment initial disclosure event occurred. Initial disclosure event occurred means we have to start disclosing it in the financial statement. So the enterprise should include the following information relating to a discontinuing operation in its financial statements, beginning with the financial statements for the period in which the initial disclosure event occurs. Let us say if the initial disclosure event occurred in January 2020, then in the financial statements of 2019-20, these disclosures have to happen. What are the disclosures? Again, normal things, but you should remember them and write the keywords. Naturally, the first thing is description of the discontinuing operations. What are the discontinuing operations that are going to be discontinued? Second, the business and geographical segments in which it is reported as per AS 17. Already, segment reporting AS 17 requires the reporting of the organization into business segments and geographical segments. These discontinuing operations are spotted where? Which business line they are representing, which geographical segment they are representing, that has to be mentioned. And specifics like date and nature of the initial disclosure event. When it happened, this initial disclosure event or initial disclosure occurrence of that event happened when that happened and how it happened. That has to be mentioned. And the date or period in which the discontinuance is expected to be completed, and if known, are determinable. So period once again. How much time it is going to take when this entire discontinuance is expected to be completed. Discontinuance means basically in our case disposal we can say. So that disposal is going to take how much time, and to whom the organization is reporting? To the shareholders. The users of financial statement should know. Silently the board of directors cannot make a decision and keep secret about it. They have to disclose the things if at all the initial disclosure event occurred. If it did not occur, then there is no need to disclose it. And one more point you have to understand here, which is like you can say business point. Accounting standard is one part. See, practically, if let us say the board of directors is seriously thinking about discontinuing some operations also, thinking only, if it has not actually entered into any binding agreement, or if it has not approved any plan, detailed formal plan, neither it has made any announcement of the plan, that is not an initial disclosure event. They don't need to disclose anything. These are secrets. We have to also keep that in mind. We're talking about some big strategic decision. Discontinuing is not some child's play. It's a big thing. And organizations may want to keep it confidential. Just because of disclosure requirements, everything cannot be shown every time. That is why, if you observe the initial disclosure event itself, that was made very clearly. Board of directors should have made an announcement of the plan also. So if the board of directors really announced the plan, then only there is initial disclosure event. If it is still a confidential thing between them, among them, then they don't need to disclose anything because it is not an initial disclosure event. That means there is no requirement of any disclosure also. So that is another point to be identified from a practical perspective. No organization would like to tell the world, oh, I'm going to dispose of this, I'm going to create a new company out of my own big company, I'm going to demerge this. They will tell it slowly. When they have to tell it, they will tell it. Financial statements is not the medium through which they want to tell the world, but how to keep that confidentiality when there is a standard which says that you have to disclose. Standard itself has given that facility. Simply don't make an announcement of the plan. Enough. If the board of directors did not make an announcement of the plan, then nothing happened. That means there is no disclosure event. Of course, entering into agreement and all comes much later. So that is why the point is, if the board of directors really wanted to have it within their own four doors, they can do so. AS24 is not compelling them to disclose all those things, but once it is approved, finalized, it is not still in the thoughts level, it is already finalized, formalized, and approved plan is there in front of them, and they already made an announcement of the plan, then initial disclosure event is there, which happened. Then only these disclosures have to be made in the financial statements. Of course, naturally in the notes to accounts. What discontinuing operations are there, what business or geographical segments they belong to, and what is the date and nature of the initial disclosure event which happened, because of which this disclosure is being made, and the time period for which this discontinuance is expected to be completed, if known, and other financial data. Financial data is like what? Naturally, all financial data will be what? Carrying amounts of the assets and liabilities, which are supposed to be disposed of and settled. Assets and liabilities which are supposed to be disposed of has to be disclosed. And what else will be there? Financial data, revenue and expenses, naturally. So the amount of revenue and expenses in respect of ordinary activities attributable to the discontinuing operation during the current financial reporting period. So in this financial period, we did not discontinue yet. So in the current financial period's P&L account, how much is related to the discontinuing operations, that fact has to be disclosed. And not only that, when assets are disclosed, liabilities are supposed to be disclosed, revenue and expenses are supposed to be disclosed, naturally the profit also. The pre-tax profit or loss from the ordinary activities attributable to the discontinuing operation during the current financial reporting period, and not only that, the income tax expense related thereto also has to be separately disclosed. So simply speaking, entire thing related to P&L and balance sheet has to be disclosed. Revenue, expenses, pre-tax profit or loss, and income tax expense, and assets and liabilities. That's all. And it will not stop. Then the net cash flows attributable to all the three types. Cash flow statement also should have the disclosure. Operating activities, investing activities, and financing activities of what? Of the discontinuing operations during the current financial reporting period has to be shown separately, because normally the cash flow statements will consist of everything. In that, how much of the cash flows are attributable to the operating, investing, or financing activities of discontinuing operations, that has to be disclosed separately. Simply speaking, all the financial data, assets, liabilities, revenue, expenses, profit, loss, income tax, cash flows, everything has to be disclosed to whatever extent it relates to the discontinuing operations in the notes to accounts. That's all. These are the financial disclosures. And these disclosures, of course, are operational and management related disclosures. What business segment it is belonging to, what geographical segment it belongs to, when the initial disclosure event happened, what is the discontinuing operation first of all, how much time it will take to complete all these procedures. These type of details are also to be given. Financial details are also to be given as initial disclosures. When this has to be given, this word is important, when the initial disclosure event happens. That's it. That is the accounting standard 24. And once initial disclosures are done, sometimes there may be other disclosures also will be required. When, if the enterprise disposes of the assets or settles the liabilities, when it enters into a binding agreement for the sale of such assets or settlement of liabilities, it should include the following information whenever such events occur. Naturally, once again, same. Whatever the gain or loss that is recognized on the disposal of the assets or settlement of liabilities. In other words, the amount of the pre-tax gain or loss, the income tax expense relating to the gain or loss separately has to be disclosed. Means from the disclosure, from the disposal, whatever the gain or loss that has arisen, that gain or loss has to be also disclosed. These are other disclosures when the actual event happens. See, this disclosure event is different. When the initial disclosure event happened, really the disposal did not complete. Discontinuing did not complete. It just entered into an agreement, and otherwise board of directors have approved a plan and announced the plan. That's all. Immediately, along with that, the initial disclosure requirements will start. But did the discontinuing already happen by this time? No, did not happen yet. Those are initial disclosures. When the initial disclosure event occurred. But after that, where really discontinuing will happen, right? That means some of the assets and liabilities will be disposed of. When they are disposed of, what is the gain or loss arising from that disposal? Pre-tax also and income tax related to that disposal also has to be disclosed separately. And not only that, the net selling price, or if at all there are range of prices, the range of prices of those net assets where the enterprise has entered into agreements, and expected timing of the receipt of those cash flows and carrying amount of those assets on the balance sheet date have to be disclosed. So to the extent, if there is no money that is already received, when it is expected to be received, that fact has to be disclosed. What are the carrying amounts of the assets which are still sitting in the balance sheet date, which have already been disposed of by entering into an agreement, not like physically happened, but already a binding agreement has been entered into. So to what extent, what level of assets in the balance sheet have already been sold off by entering into a binding agreement. Assets includes always liabilities also, if at all both are sold at the same time. Assets sold or disposed, liabilities settled. Only words are different. Sale of assets, settlement of liabilities. That is the word you have to use. So these are other disclosures when actually the discontinuing happens or disposal happens. What are the disclosures? Simply speaking, what is the net selling price of this net assets, and what could be the timing of the cash flows if they are not already received, if they are going to be received in future, when are they going to be received, and how much are going to be received, and what is the carrying amount of those assets which are already sitting in the balance sheet, which are now being disposed by entering into a binding agreement. Or if the already disposal happened, gain or loss resulting out of such disposal has to be shown as a separate item. Pre-tax also and income tax expense or gain related to such gain or loss also has to be separately disclosed. These are other disclosures. So point to be noted is these disclosures are different. These are initial disclosures which should happen when the initial disclosure event happens, not necessarily when the discontinuing happens. Even the proposal for discontinuing is there. When this initial disclosure event definition is met, then these disclosures are supposed to be done. Later, when the same deal actually finalizes, then the other disclosures have to happen. These are the requirements of Accounting Standard 24. So simply once again, as far as this standard is concerned, theory questions can be expected or case-based questions can be expected. What is discontinuing operation definition? Examples of which are not discontinuing operations per se, and when can we say that a component of an organization can be distinguished operationally and for financial reporting purposes, and very importantly, what is the initial disclosure event and what could be the items which might be included in a detailed formal plan, and most importantly, once again, the initial disclosure requirements when the initial disclosure event happens. After the discontinuing happened itself, what are the other disclosures? That's all. This is the crux and essence of AS 24 in a nutshell. With that, we'll conclude today's session of Accounting Standard 24. And in another session, we'll discuss some other accounting standard. Till then, take care. Bye-bye. Thank you very much.